Hey, what's going on, subscribers? Welcome back to another brand new video from the Flaming Profits YouTube channel. Welcome back. Please make sure you like this video before we begin. Today I will be talking about the number one stock to buy, always, forever. The number one stock you should always be buying, non-stop. And I'm also going to be discussing why an economic crash is a good thing and why you want it to happen. A lot of people fear when overall stocks go down in value, but this is actually a great opportunity for you. And before we begin, I do want to share this commission links. You can get a free stock with Robinhood as soon as you sign up, as long as you use that link that I have there. I'll also have it listed in my description so that you can use this link to get a free stock as soon as you sign up for Robinhood. And this is also Mercari, my favorite buying and selling platform. I've sold more than $500 in this platform, and I highly recommend it for buying and selling. You'll get $10 off your first purchase if you sign up with that link, and it'll be listed in my description as well. So welcome back, subscribers. Today I'm going to be discussing this interesting subject on the best stock that you should buy, and it's actually an ETF, and it goes by the ticker symbol. Before I release it, comment down below if you have a guess on what it's going to be. But alright, so I'm going to go ahead and say it. It is VOO. It is the S&P 500 ETF fund. So by you purchasing one single share of this ETF, an ETF stands for Exchange Traded Fund. It's basically a collection of stocks instead of just one individual one. So this ETF called VOO is made by Vanguard, and that's a company that makes high quality funds that you can invest in. And this one, you can buy it by searching VOO, and you'll be able to find it easily. So as you all know, we've recently been in a small sell-off right now, and people are being really scared about the overall economy, especially after decreasing the interest rates, and also there's some trade war escalations going on with China. But the point I'm going to make is you should always be buying this ETF, VOO, because it is one of the safest investments you can make. This is by you buying one share of this ETF, you're basically buying 500 companies all at once. So it is very, very diversified. You don't have to worry about making a bad stock investment, because by you simply buying one share of this, you're literally buying a portion of America, basically, the American economy. This is dominated by the 500 largest companies in the United States. They have the largest market cap. These companies are very, very unlikely to fail over time, and they will actually thrive and go up in value, just as you see in this graph. Overall, this stock has an uptrending growing pattern, which I love. This is my favorite pattern when it comes down to stocks. You want your money to grow, not decrease in value, and you can tell that a stock will grow your money by the technical pattern that it has. If it has an overall growing pattern, then it's a good investment. If it's downtrending, then it's a bad investment. And one day, a week, a month, 3 months don't make much of a difference, but where you start getting a full big picture is on the max chart. So if you search up any stock, you can view the max chart of any stock, and it'll show you the overall pattern. So there you go. You see that beautiful pattern you see? Uptrending, always growing. Your money is a representation of this graph. It will always be consistently growing like this. Obviously, we do have point in times where we have recessions and the stock goes down in value, because overall the 500 companies are making less profits due to less money in the economy. But these are actually very, very good opportunities. You actually want this stock to go down in value like it is doing right now, because this will let you buy those shares at a cheaper price than most people. And you have to be very attentive to have cash on the side always, so that you're ready to invest when it comes down to the economy being bad. You want the economy to go down, because this will make you more profits in the long run. And I'm showing you a line of support on the growing pattern that you see, just so that you get a clearer picture on why this is a growing pattern. You see this trend line that I'm drawing right there. It always seems to follow that as soon as it hits it, it always rebounds. So I would 100% always buy the stock. I'm trying to be diligent about buying one share every month of this, but I'm going a little bit heavier now that the economy is a little uncertain and weak. So I will be buying more of these. Right now I hold 9 shares of this stock. And this ETF actually pays you a dividend of $1.39 every single quarter per share. And it also has a very small expense ratio. ETFs, you have to pay a little bit of money to invest in them, but it's almost insignificant. It really is. It's just like a couple of pennies. The percentage it charges is 0.003. So I wouldn't even worry about this at all. You'll make more money in the long run than how much you'll spend, which is almost nothing. And just to give you a little bit of history, this is a brief description of the S&P 500, a little bit about its risk potential, its performance, and the different stocks that it owns. There's some hypothetical growth pattern charts. The portfolio composition is very diversified across many different industries, so it's very unlikely to go down in value significantly unless we're in an economic recession or something along those lines. But like I said, those are great opportunities where you should actually be buying more than just one share every month. You just take advantage of when it's downtrending like it is right now. And this is also why I made this video at this time as well, so that you're aware of what's going on in the overall economy, the stock market. And I do want to share this article with you. So apparently the S&P 500 suffered its worst week of 2019 this year, and it might not be finished falling. That's what it's saying. So like I was saying, you shouldn't be scared of this at all. This is actually a very good opportunity because you'll be able to lock in some shares at cheaper prices when everybody's selling, and you'll get the cheaper shares, which in the long run will grow your profit significantly over time. And if you continue buying one share every single month for 5-10 years, you'll have a pretty good investment that you can rely on for the future, whether it's you want to retire or you just want extra money on the side. Maybe some dividends that'll pay you every single month, like I have growing for myself. Right now I'm sitting at $25 per month just on dividends. This is money that I don't have to work for. It literally just comes into my Robinhood account every single month, and I'm hoping to grow this to 100 to 500 to 1,000 a month. Slowly but surely, I know that I can achieve this through dividend investing. But this is a fantastic way for beginners to invest in the stock market. It's actually very hard to pick stocks that will do great in the short term and long term. So by you buying this ETF, you take out all the guesswork, all the hard work when it comes down to picking an individual stock. There's only certain kind of people who are willing to take the time to study stocks and pick the right ones that will grow significantly in a short period of time or long term as well. So this is kind of like a shortcut that'll still give you great returns. Warren Buffett always recommends investing in the S&P 500 for an average individual because it's just the honest truth that some people don't have the time, don't have the commitment to learn about investing, don't have the initiative to learn to read balance sheets, to view technical patterns, to understand companies, to listen to conference calls, to learn about companies reporting earnings and what exactly that means. All of that is very important when it comes down to picking an individual stock. So this is a better choice for most investors. That's why I want to put it out there so that you don't have to feel nervous or kind of scared of investing, because I know this can be intimidating for a lot of people. So by you buying one share of this, again, you're investing in about 500 companies, the biggest companies in the United States. And I do want to show you the importance of buying when shares are cheap. So this is a candlestick chart, and the red parts right there indicate when it had a sell-off. It could be like a short-term sell-off or a long-term sell-off, but in those 5 years, all of those red candlesticks that you see is when the stock went down in value. And I'm marking it in yellow so that you can see it a little bit more clearly. But whenever this happens, you should try to buy more shares. during those times. And you'll notice by the Robinhood chart, if the week chart is down, that's when you should buy an additional share. If the month chart is down, you should buy even more. If the 3-month chart is down, then you should buy even more than the ones before. And even if the year is down, you should buy an incredible amount of shares, because these opportunities don't last that long. So I definitely want you to be aware that the economy being bad is not a bad thing. Let me know if you enjoyed this video. Please make sure you like this video to show your support. Comment down below if you have any questions for me, any suggested videos, any questions you might have. Thank you all so much for joining me in this video. I really appreciate it. And thank you all so much. I'll see you all in the next video. Also make sure you hit the notification bell button so that you can notified as soon as I release brand new videos. And make sure you're subscribed to the Flaming Prophets YouTube channel. I would like to have a 1,000 subscriber channel someday, so I would highly encourage if you help me out with this goal that I have. I know that I can accomplish this with consistent videos, and as long as I provide value to every single one of you.